Crypto and stock market sentiment is 100% in the dumps. If you look at the Goldman Sachs sentiment indicator, it's now dropped to the lowest level that we've seen in more than 2 years. And if we look at the Bitcoin over here, fear and greed index, well, we have the fear and greed oscillating between that 10 and 30 level. The bad thing about this is actually where we've seen those downtrending moves persist. When you hold into these zones for long periods of time, you can see prices continue. So in today's show, we're going to have a look at the potential again for if there is a chance for a short squeeze to give some at least immediate relief to the crypto markets. And we'll have a look at the high time frames if anything has changed over there, as well as the stock market. The stock market is coming into a very key level, which we outlined in yesterday's show. Yesterday, we got that move up into that level. We're also going to outline the Bitcoin short trade that I'm currently in. If we go over there, that is the Bitcoin short trade given in the Whale Room Discord, of course, yesterday ahead of time. So let's get straight into it. Smash the like button, hit the bell notification, and subscribe to the channel, and we can get straight into the show content. So looking at the bubbles over here, again, it is a mix of red and green. Most of the coins on the hourly are pulling back, and that's due to that Bitcoin short trade, of course, playing out in the immediate term. Now, if you look at the quant, one of the best quants on crypto Twitter over there, Kyledoops over here, and he's got 412,000 followers. He has actually just posted this for the first time since the last bear market, which was in 2021. And he said the Bitcoin bull cycle is over, expecting 6 to 12 months of bearish or sideways price action. And this indicator over here is based on a whole bunch of different on-chain metrics, looking at things like the 𝗪𝗡𝗪 score, the SOPR, and the NUPL. Long story short, it shows a 365-day moving average, and it shows inflection points where the trend of the 1-year moving average begins to change. And you can see it over here. That 365-day moving average based on these on-chain metrics has officially started to roll over, very similar to Bitcoin price, right? These are typically lagging indicators, but they're helpful in giving confirmation as to what could potentially come next, right? And we identified already, at least I did, at $92,000 to $94,000 where we were exiting Bitcoin, and we showed incredible warning signs as price was likely to roll over. Now you're seeing the on-chain metrics catch up, where you have the long-term hodlers that are now starting to already take profits from their positions, which they got in early. But there is, in the short term, of course, always a possibility for a short squeeze, but this depends on whether retail are obviously going to go for it. And what am I talking about? I'm talking about the whale, the hyperliquid whale, right? If you look at the hyperliquid whale, their total position size now is 6,210 Bitcoin in size, absolutely massive. Their liquidation price is at $85,556, meaning if Bitcoin pushes up into that $86,000 region, that's going to squeeze them out of this trade. They probably do have stop losses in place. I believe that their take profits are set somewhere into, let's just see if they have it actually written over here, but I believe, so you can see it's a 40x cross margin position. I think that their take profits are set somewhere in the $60,000 zone, 60 to 70. They have a couple of orders scattered over there. So if we get a GME like short squeeze from the retail market and they all decide to jump in, that is one of your potentials for a short squeeze. And remember, anything can happen in this market, as we do see very, very low volume. It continues to decline. The daily exchange volume with the 7-day moving average is moving towards the downside. And the last 24 hours of liquidations are now under 200 million. We've seen it hovering around that $200 million mark now for quite a few days, right? So my bias is still towards the short side. Nothing has really changed for me. I will manage the risk accordingly. I'll show you what to do with your trade in terms of your stop losses in just a moment, but it's got a lot to do with the stock market, right? The stock market bouncing over here. You do have 2 green days in a row. You're coming into that 200-day moving average, and you can see the futures market is already showing a little bit of weakness into that moving average. So if we do start to reject over here into the underside resistance, which was one of the target levels at the 0.382 fib, that's at $5,764, then ultimately, well, that wouldn't be good, right? If you do expect a bit of weakness over here to set in a lower high, then you're looking at continuation towards the downside. However, what I would say is if you can close strong with another green candle over here today, and then you can consolidate and any pullback puts in a high low, then maybe speculators will start to jump back into the market, and that does create a long opportunity. But that's probably more for later on this week, possibly even next week, that we will discuss that, right? If we go through onto QQQ, well, pretty much exactly the same thing. Dow Jones, also the same thing, coming into that 200-day moving average with resistance over there. NVIDIA, same thing. MicroStrategy, let's have a look at this one quickly, if that just loads. 1 second, guys. All right, there we go. MicroStrategy is actually above its 200-day moving average, but I would say that very, very unlikely that you're going to take out these highs for a very, very, very long time. It could be months to even a few years. Unpopular opinion. Some people may not like to hear that. I know that there's a lot of MicroStrategy bulls out here that have been playing the leverage play, right? MicroStrategy as a low leverage play against Bitcoin. So that is that. Let's have a look quickly at Tesla as well. We need to see Tesla looking very, very weak, but the one promising thing that you have on Tesla is that RSI has broken this downsloping trend line. So you've officially broken out of that. Maybe you'll get some short-term relief. I think it's going to be entirely dependent on what the stock market does. But the fact that it hasn't even rallied up to the 200 moving average, whereas most of the other stocks have, that's problematic, right? So if you do want to trade these markets, by the way, I do want to just remind you guys, we are taking these trades, right? These trades have been dropped in the Discord. Here it is. This is Mitsubishi Heavy Industries. If you want to trade, if you want to get a bit DJing in the stock market, our traders are crushing it. You can see over here, $899 daily profit. Usually they oscillate between about $1,000 and $3,000 every single day. Most specifically, we're trading over here on Monday, Wednesday, and Friday for the US markets. This is at least Wall Street Singh, one of our very own traders specifically focusing on equities. There's a link in the description below if you do want to join into Whale Room. There it is. Click that link over there, jump in and reap the benefits. All right. If we look over here at USDT dominance, still the bias is that this is in an uptrend, and I expect that uptrend to find extreme weakness and possibly even end if it gets into the 6.3 zone, and that's why you're seeing prices still come down. If we look at the total cryptocurrency market cap, which we haven't brought up for quite some time, this zone over here in the gray box is the equivalent of Bitcoin coming down into that $68,000 to $72,000 region, which is the prior highs set from, I think it was all the way back in, what date was that? That was around March 2024. So you have had the total cryptocurrency market cap revert back into the zone. Pay attention to this. This is your dead zone. If it breaks below 2.19 trillion, the chances increase significantly that the cycle is in fact over, and that the crypto quant over here is correct, right, in that regard. So I'll be keeping a close eye out on that. We'll look for a bit of strength over here. Bitcoin looking weaker, or excuse me, the total cryptocurrency market cap looking weaker than what Bitcoin is. So Bitcoin may still be lagging this move and may continue down into that 68 to 72K region. Not only that, but if we do look at the RSI on the high time frame as well as the MACD on the high time frame, we are presenting very similar sell signals to what we saw back in 2021. Here you can see this is your 2021 period. You got a strong sell signal over there. It created bearish divergence. RSI was coming down, MACD was coming down, price was moving towards the upside, putting in the first high at $65,000, your second high over here where the little hand is that's pointing to the sell signal, that came in at $69,000, and ultimately you led into an actual bear market. The second time now is what we've just experienced, where Bitcoin has rallied up to $108,000 with price going higher and higher, and the momentum oscillators here, you have your RSI coming down, bearish divergence over there. We have highlighted this in real time. We needed to wait for the trigger to execute on that trade, which we've now effectively done, right? But we already identified this all the way back when Bitcoin was between that $108,000 and $105,000 region, but we only got the trigger for the breakdown of the range low to exit that position because price action rules all, right? Momentum oscillators, divergences, these are all helpful tools that you can utilize to predict where things may go. It's various different layers, right? Price action, where the actual price is the first fundamental most important thing when it comes to trading. And then we utilize these things as confluent factors, supporting evidence, if you will. And now that we've broken below the range lows, that was below that $92,000, $93,000 range low level in Bitcoin, that was the confirmation that you want to start taking this incredibly seriously. And now you got that 2-week MACD. This is probably one of the scariest of the signals. You got those moving averages highlighted in the red circle over there crossing, but from quite a height, which means that there's a lot of room for this to move towards the downside. Now you need to think of this like the oil tankers that are sitting behind me over here in the ocean. When this thing starts to turn and that oil tanker has committed to turn the corner, it's going to continue to turn. If he changes his mind again, it's going to take a long time for that ship to change course once again. And that's why you want to take these signals incredibly seriously. When these MACDs and these RSIs on the high time frame start to give their sell signals, it is cause for concern. So I'm checking the comments over here. I know that it's probably not the best information, but remember, volatility in the market is what allows us to become so uber wealthy, because we can play the ebbs and flows of the market cycle, right? It's, as a trend trader, you want volatility. That volatility is a good thing. If the market is stagnant, sideways, and within a tight range and incredibly boring, it becomes very, very difficult to succeed within the markets, right? So the question is, which way is max pain? I think that the max pain is still towards the downside, and you have to consider that the majority of people who entered into the crypto markets in general over the course of the last year are currently right now underwater. And therefore, max pain is towards the downside. That is the truth of the matter, right? We can also look at the options max pain, which I haven't brought up today, but we'll see if we can find it just now. Okay, we got price as well below the 21 exponential moving average. And as I always teach in Wells School, by the way, guys, make sure you jump into there if you haven't already. You don't have to pay the $2,000. Use one of the exchange links in the description below over here. I can recommend most of these exchanges are going to be absolutely phenomenal with great sign-up bonuses, and you can get into Whale School over there. So according to this, 21 weekly exponential moving average angle towards the downside, that is an exit signal. And I know it's confusing because you do have your weekly stochastic RSI, which is at the bottom and turning towards the upside. And I'm sure that confuses a lot of people. But remember, this is where bears can maintain control. When you're in the top side over here, look how long this maintains in this section over here. Price ultimately goes, once the stochastic RSI crosses up, you essentially run. We can measure that out, and this is how bulls maintain control. You run 81%, right? So while it hangs around in these low regions, bears can have control. What am I saying? Am I saying that you're shorting this thing to zero? Absolutely not. All that I'm saying is that really all you need to do is wait for price to break and reclaim these key sections. Let's maybe use a clean arrow over here to make it a little bit more specific for you. But all you need to do is either reclaim that or drop down into this box, one or the other, right? That's where you start to take big trades at those extremities. Until then, it's pretty much a no trade zone. I'm not shorting with size. I'm shorting with smaller positions, as I've shown over here, but not with size. With size, I'm pretty much just remaining in cash, right? I'll enter a sizable position if it does come down into this 68 to 72 for a short-term bounce. That could lead to anywhere around a 50% move. That's phenomenal gains. Or alternatively, I'll get long again if price can break back above this top section over here. So according to this chart over here, it's increasingly more and more bearish each day that we hang around these lower levels, increases the chances that you're going to capitulate down into this region. And then bulls will be hoping that price can find support 16% down, right? That's going to be the key area. So that's still the current picture. That's still exactly what's going on over there. We're still below all the high volume areas. Nothing has changed in that regard. We're now losing all these moving averages. Prices hanging for multiple days below all of them. And sooner or later, if we do drop down that 16%, you're probably inevitably going to pull the light blue below the dark blue, meaning the 200 EMA is going to fall below the 200 MA, and that becomes a really bad sign, right? I'm watching the RSI over here, similar to what I showed on Tesla, has already broken this level. Bitcoin RSI is still in a very, very strong downtrend over there. We do have I think we've already had the chance to play it out, but the bullish divergence, right? You can see over here, price going down, RSI going up, you kind of had the opportunity to play that out and it didn't amount to much, right? So this move over here, that was playing out the bullish divergence. How big of a move did you get? Let's measure that out. So, I mean, from the wick low to the high over there, you got about an 11% bounce. So we'll see what the RSI does next. All eyes on that to see what happens. But your yellow line over here is your RSI level, right? The yellow horizontal. Let's clean this up for you. So let's just wipe that out. There we go. The yellow horizontal over here is your RSI pivot level. It means that if price is above that, it gives the RSI and the daily a chance to continue to slope towards the upside. If you drop below that, the RSI will turn back towards the downside, at which point you can say that the bullish divergence that we saw on the daily had already played out and we've reset, and now we need to wait to see, is there any other new form of divergence coming? So again, I did drop this yesterday, right? I dropped this yesterday showing how price tends to ride these trend lines, and occasionally when you drop it, like in the white circle over here, the next push up over here leads into another rejection, a double top, a lower high, whatever it is you want to call it, and then you tend to see price run in the opposite direction. So that was the short trade that I gave the whale room. I actually mentioned it also preemptively on the show, but I gave the detailed breakdown of everything that you're looking for in the whale room Discord, and that's exactly what's happening, right? What would I do now? I think that if you do want to eliminate the risk, you know, you can take probably a little bit of profit, maybe take 20% off the table, and then reduce your risk over here. If price does start to get back above these wicks, you know, if you want to reduce your risk to that point, that makes a lot of sense. Alternatively, you could just eliminate the risk completely and let this be a free trade and see if it rolls over. But you'd be looking to take the majority of your profits in this region over here, and then maybe just leave 25 to 30%, which you can run all the way down to the bottom over here at 77,400. So that's what I'd be looking for. Again, a very, very low volume, illiquid market, which means there can be a lot of chop around, right? So it's going to be a difficult trading environment at the moment. So be prepared that you can often get stopped out, but as long as you're stopping out at break even, I think that's fair game, right? Okay. Also, what I wanted to mention on the 4-hour time frame over here, you can see that this is also essentially creating a bearish wedge over here, rising wedge, following a previously bearish move over there. And where would that take you? The breakdown of this would actually take you down to about $74,000, which means you should get your full take profits over there. So lower lows and lower highs is the name of the game. And on the high time frames, that is exactly what we're seeing. Again, guys, a reminder, Whale School is not going to be free forever. This is the last time that it's going to be free. If you do want to join, use the link in the description below. 13 days left to join. You can sign up to WeX, deposit $200. They'll give you $100 for free as a welcome bonus, and then you can use that as well when you come as your school fees, right? When you come to Whale School, we'll be doing all of the course content relevant to the current market conditions. So if you do want to learn how to short the market, 100%, I'll be teaching that in Whale School, right? Okay, continuing on over here. I had a look at this before. I'm not going to spend too much time on it. There's kind of mixed signals over here across the various different time frames, but let's just have a look at the quickly at the 5-minute time frame over here. Let's just clean that up. So this is just focusing on the open interest. Open interest has been coming down. You might see longs trying to build a position over here. If you see open interest rising and price is rising with the open interest over here, and that does something like this into another lower high, then expect that when they flush that open interest, it's probably going to lead to the next leg down. But again, it's going to be heavily driven by the stock market. So just keep an eye out on the stock market. Also, just quickly checking in on the trading bots. Everything is still filling the positions over here on Pinex. There is a link below to those bots if you do want them. So we'll continue to monitor that. And ETH BTC, right? ETH BTC creating new cycle lows. Unbelievable. New cycle lows over here. It's been absolutely brutal. 1,533 days, which is just feels like a lifetime, right? I mean, that's years, like 4 years since it's tested this last region. This was 2020 that led to that parabolic advancement over there with a massive, massive rise. I think it took ETH to around that $5,000 mark, $4,000 to $5,000. And now ETH BTC has lost a lot of ground against Bitcoin all the way back down here. Again, don't try and front run this trade. wait for a proper breakup structure and for the trend to completely reverse, right? So the breakup structures we had previously outlined were over there. Now we can lower this, right? I would now be looking down to this region. True safety will come in above that. But if you want an aggressive entry, you're waiting for a break above the yellow line, 0.029, right? 0.029. Now, if you don't want to take my word for it that the trends are down, what you can use is an EMA ribbon like this, the Super Guppy indicator on the daily. At the very least, when it comes to your trading, have a look at your charts on the daily time frame. This uses a whole conglomerate of moving averages and EMAs, 3, 9, 12, 15, 18. It goes up in multiples of 3 all the way up to 66, right? And what it shows is when it's red, you are essentially in a downtrend. I do teach this in Whale School, right? So if you want the easy route, just go to Whale School over there and you can learn about it. Now, if you look at BTC, it's red, right? On the daily, it's red. If we look at ETH, on the daily, it's very red. If we look at Solana, it's red, right? If we look at SUI, so if you're debating whether your coin's in an uptrend or a downtrend, just come and have a look at this. SUI in a downtrend, Hype in a downtrend, Zeta in a terrible downtrend, a very powerful one. Bear Chain, not enough price history to look at. Near in a downtrend. Cardano, this one's interesting, right? Because this was in an uptrend, held neutral, and now it's starting to turn red. Lithium in a powerful downtrend. Aptos in a downtrend. Atom in a downtrend. AVAX in a downtrend. A0 in a downtrend. Phantom, this has got more price history. It's, of course, called Sonic now, but also in a downtrend. Injective, powerful downtrend. Casper downtrend. Carver chopping about over there. Say in a downtrend. Ton in a downtrend. So, I mean, you can play a little game over here and go find the coin that is actually in an uptrend. Is there anything in an uptrend? Maybe XRP, actually, which is so ironic because we know how hated XRP is, and that community remains super strong. It's not in a downtrend, but it's neutral. And I guess you have to wait for the next directional move over here on XRP. So that's what we're looking at over here on at least the daily time frame. Let's see if there's anything else on these timeframes that we have to look at. If you do so happen to find a coin that is strong, for example, that's not in a strong downtrend, but is in a neutral position or an uptrend, always remember to go and have a look at the pairing to see what that coin looks like against Bitcoin. Because if you find something that's in an uptrend, but it's in a downtrend against Bitcoin, it's probably still not worth jumping into, right? So if you look over here, for example, at SUI deviated the top of the trading range. It does have mid-range support against the Bitcoin pair over here. That's going to be coming in around 2,500 Satoshis. Those are your last 4 digits, right? Otherwise, pretty much everything is getting crushed against Bitcoin, right? Sol BTC marking down yet again. I mean, that was pretty much a relief bounce into the underside resistance, testing that and failed. And now it's just rolling over yet again, right? And these trends can persist for long periods of time. So stay safe out there. Stay safe, guys. Just remain patient. Now is the time to be in capital preservation mode. Look after your capital, preserve it, right? Be very, very careful out there. And then when the time is right, you can start to establish positions. Okay, I see some of you said Mantra. Yes, Mantra has been one that's been phenomenally strong. So let's actually have a look at it on the Super Guppy and see how that one looks. Green, right? So this one's still maintaining green. So then what do? You go through over here and you have a look at Mantra against Bitcoin. And how does that look? And it looks powerful, right? Mantra has been one of the absolute strongest coins that are out there. I would just watch for on the BTC pair, if you ever took a long trade on this, so if your bias is that Bitcoin, that this is putting in if your bias for the current crypto markets and the stock market is that this is a big bear trap, I definitely think it's more wise to look towards coins like this that are in a powerful uptrend. And if you are going to, for some reason, play the long side because you think it's a big bear trap, look to the coins that are strong, right? Like Mantra. Find your entry on the USD pair. Check the BTC pairing to see that it's still strong. This is kind of your range-bound environment. I'll probably tighten this up a bit. Let's maybe put that into the same color over there. And we'll go into, there we go, into white. Let's just make this one white. It's not, okay, it is white. Okay, there we go. So this is your trading range. As long as you maintain the trading range and you're holding that range low support, then theoretically, yes, it makes more sense to hold Mantra USD than holding anything else, right? Or holding BTC, for example. So if it can maintain this, as long as you don't put in another lower high or swing failure over here, because you can see, look at the amount of selling pressure over there based on those wicks, right? Multiple days of at least distribution over there. Price comes down, holds up. So would I buy it here? No, probably not. I'd wait for it to either break and hold over there, therefore you buy the breakout level over here and the retest into the range high, or you need to wait for it to continue to range. At that point, your moving average will continue up, and then you might find some mid-range support for a safer entry. So that's what I'd be looking at over there. Let me know in the comments if there's anything else to have a look at. I know also, by the way, guys, I know that we have a bull moon, but remember what I said, price action trumps all, right? We have a bull moon. The bull moon has been in effect for a couple of days. Bull moons in downtrends are less reliable. Bear moons in downtrends are extra reliable. Bull moons in uptrends are extra reliable, but bear moons in uptrends are not so reliable, right? So basically, it all comes down to trend. The trend is the most important thing over there. We're 4 days in. Could you get a high spike? Absolutely. But I don't believe that price is suddenly going to run away from you if you are a bull at heart. I'm a bull at heart. I believe things are going up over time to who knows how many millions of dollars per Bitcoin, but it's not going to do it in one candle, right? If you do get a breakout, it will look something like this. You know, you need a big push up. You need to break above this level. There's so much work to be done over here. Before you do that, you're probably still going to reject, come down, create a high low. There'll be ample opportunity to see that things are reversing. Right now, you need to protect your capital, right? Be safe out there. Be safe out there. Don't lose money. And if you want to make money, please come to Whale Room as well, right? There's a link in the description below. Jump into Whale Room. We'll help you out there to trade the market. So that's it from me, folks. Thank you so much for watching. I appreciate each and every single one of you. I will see you on the next one, and the Whale Room members will be doing our live session later on today. So I'll see you on the next one. Have a good day, and cheers for now.